Welcome to bonus module 1, the Fibonacci Follower Strategy. What we're going to be doing in this module is we're going to be bringing together a lot of the things that you've learned, and we make a fantastic strategy out of it that has a very, very high win rate. I'm just going to take you back for a moment to our push-pull uptrend. And if you remember, this is how we looked at, and in this training module, we worked out how you're going to look at higher lows and higher highs to be able to say that you're going into an upward trend. And you've got 3 points that you look at to make sure that you have confirmed that it's in an upward trend. If you remember the 3 points, if it's in an upward trend, you've got a higher high than the previous one where it stopped. You've got a higher low than the previous one and then another higher high. So when you come back, that's where your first trade is. And normally, the pushes are far, far bigger in size than the pullbacks. If you look at the pullback here, it's this size, but the push was that size. Pullback small, push big. So your push is always going to be much bigger. And similarly on the downtrend, you now know how to detect when a trend has started going down. The strategy is called the Fibonacci Follower Strategy, and you'll understand why it's called the Fibonacci Follower Strategy as we go through it. First of all, we take the trend. You identify the trend cycle, and you know how to detect now a trend down starting and a trend up starting. And you're going to capitalize on those push pulses, whether it's up or whether it's down, because the push cycle is going to be greater than the pull cycle. And it has a defined criteria for this strategy. You're also going to use Fibonacci, and that's why I've mentioned it a number of times. But the Fibonacci, you're going to adjust to the price action. It's got defined levels of action. In other words, different areas of the Fibonacci, different levels will be for something. And it's also got an institutional trader's mindset, and the ratios give you very high reward to risk. If we look at the basics, then you can use it on any Forex major or minor markets. In other words, you can set it up on all 26 markets if you want to. And what you're going to be doing is adjusting the Fibonacci as the market moves, so it's dynamic. You're then going to be placing pending orders. So this is a very low maintenance strategy. No matter what you're working, you can use the time frame that satisfies your life and how you can spend time trading around that. And the win amount is always more than double the loss. So therefore, the drawdown is very low because one win makes up for 2 losses. The time frames. Well, you can choose which time frame suits you around your job. The minimum is 5 minutes and the maximum is going to be 4 hours. But the best time frame is 1 hour time frame. Again, whatever your lifestyle is, you can use this around it. To set your chart up, you go to the preferred time frame that you want and you put on a 20 simple moving average in blue, a 50 in red and a 200 in green. You have a black background, the bull bars are lime and the bear bars are red, and we've shown you how to change the look of the MetaTrader to be able to do that very, very easily. We've also shown you in the indicator section bringing on a moving average and how to do that, but we will do it again when we set this up in this module. A buy trade. This is what happens. You first of all ensure an upward trend, and you know how to do that now. But also, the moving average is going to help you. The blue line in an upward trend needs to be above the red, and the red line needs to be above the green. As the first push of the market occurs, then you're going to bring a Fibonacci onto that chart. You're going to start at the previous swing low, and you're going to take it to the current high position. You're going to place a pending order, which is a buy limit at the Fibonacci 50% level. The stop loss is going to be 5 pips below the Fibonacci 0 line, and take profit is going to be on the Fibonacci 161.8 line. If the market goes higher, you just keep moving the Fibonacci to the new high, and you reset where the pending order is. If the trade then triggers when it hits the 50% level, and then goes to 100%, you take your stop loss to 0. And the same on the sell trade, it's the opposite. When you're in a downward trend, you're also going to see that the blue line now is below the red line and the red line is below the green. You bring your Fibonacci onto the chart at the previous swing high position and take it to the current low because you're looking at a sell trade push cycle. You place your pending order at the Fibonacci 50% level, your stop loss to be 5 pips above the Fibonacci 0 line because it's a sell. And your take profit's going to be the 161.8 line. If the market goes lower, you then just move the Fibonacci to the new low as the market is moving, and you reset where the pending order is, because obviously if you move the Fibonacci, then the 50% level is going to change. If the trade goes to 100% Fibonacci level, you take your stop loss to 0. Let's have a look at an example of a sell. So you have just seen that the market now is in a downward trend, and you see you have 3 confirming positions. So you know that you're in the first main push downwards of a sell. What you do is, as this market is coming down, so as it gets to this point, you just drag the Fibonacci down a bit further. When it goes to the next point, just drag the Fibonacci down and keep dragging it down until you're at the lowest point. And that is going to be the market's maximum move down on the first push cycle down on a sell. Then the market's going to bounce back up. And what you do is you don't know what that market's going to do, but you keep adjusting this, and all the time you will have a pending order, a sell limit on the 50% Fibonacci level. And your stop loss is going to be 5 pips above the Fibonacci 0, which of course is your previous swing high, so it's going to be just 5 pips above here. Then you're going to have your take profit on the 161.8. As you adjust the Fibonacci, the 161 level is going to change, and also the 50% level is going to change. The only thing that will not change is the Fibonacci 0, because that is started at the high. So therefore, it's only going to be the 50% and the 161 that changes. As you drag it down, all you have to do is just drag down your pending order. You click on it and drag it down. And the take profit, you click on it and drag it down. So it's very simple to do. It's a couple of seconds work. And the market pushes back up as you'd expect in a sell. You're going to have the return, the retracement, and of course it'll hit the Fibonacci 50% level if the trade is going to start. And then the market has its next push down. Now what's happened now is that you've started on the Fibonacci 50% and the market's pushed through the 100% level. So at this point here, you grab your stop loss and just drag it down to your entry. So you take it all the way down and you just drag it to your entry, because if it gets to 100%, take your stop loss to 0. So all you'll be doing is dragging it down to where the old 50% level is, where you entered, in other words. The market again retraces, doesn't hit the 50% level where your stop loss now is, so you've moved your stop loss down, and it carries on down as you would expect in a downward trend, and it hits the 161.8 level. And at that point in time, you have won. But of course, if you look at how much you can lose, you can only lose 50% of the Fibonacci level, because your stop loss is 5 pips above the high. This is the 50% level, so you can only lose this amount. But of course, you win more than double, because you're going to 161.8 level. Once you've hit that, you just start again. So what you're going to do this time is, this is the previous swing high. You're going to start your Fibonacci on here, and you're going to drag it down to where it is at this point here, because you've just taken profit. Take the Fibonacci off this position and drag it down to here, which will give you a new pending order sell and a new take profit and a new stop loss, which will be 5 pips now above this one, and you start all over again. What we're going to do now is we're going to take you to some of the markets, and we're going to show you exactly what happens. If we look at this push-pull again, what you're going to be doing is, once you've determined that it's a downward trend, and it'll be this position coming down here, you've then got your 3 points, and the market starts coming back. What you'll be doing is you'll be then looking at the next push down. So as you get the next push down, at this point here, you're going to be starting to put your Fibonacci in place. And market comes back up, and then it goes down further, so you drag your Fibonacci down further. Market goes down, you drag your Fibonacci down further. And all you're doing all the time is moving your entry. When the market comes up, it hits the 50% level. And then you run it all the way down to 161, which will be down here somewhere. Same on an upward trend. You have your higher high 1, higher low 2, higher high 3. You wait for the market to retrace. When it starts going up, this is where you put your Fibonacci. So you start dragging your Fibonacci up from here up to here. Once you see it going higher than the previous high, put your Fibonacci on, and as the market goes up, now if this is once every hour, you could look at it after every couple of hours and just adjust it to the next level. You don't have to be watching it all the time. And you will then continue to adjust it, and this will be the high point. When it returns, if you look at this distance here, this is about 50%, most probably will have triggered, and up it goes to 161.8, somewhere up here, another win. I'm going to take you on a live market now and show you exactly what you would do. And when we go onto the live market, everything will become very, very clear on exactly what you have to do. So let's go over to a MetaTrader and do that. Here is our MetaTrader. We're going to go and open the indicators and trend, and we're going to bring on the moving averages. We want 3. So bring on the moving average we're on the GBP here at the moment on 1 hour. And the first thing we're going to do is 20 simple moving average, and it's going to be blue. The next one we're going to do is a 50 moving average. So again, bring the moving averages on. This time it's going to be a 50 SMA, and we're going to make that red. And the third one we're going to bring on, so let's bring a moving average on again. And we're going to do this 200. So 200. And it's going to be green. So let's have a look at green. We may even make it lime. Just to make it a little bit clearer, let's do lime. That's very clear. And that is its setup. It's as simple as that. So let's have a look at the MetaTrader. What I'm going to do now, we're in a downward trend here. So let's have a look how we apply this. And you can see then how easy it is. So let's go to this downward trend that we've got at the moment. So we start here. As you can see, we've come into a downward trend. And why do we know it's a downward trend? Well, we're getting lower lows all the way down, and we're getting lower highs. But also now you have the 3 lines to tell you. When a market comes below the 200 moving average, which is the green, you tend to know that it's going into a downward trend. When it's above the green, it's in an upward trend. But you also wait for the 2 other lines to come down as well. So we know at this point here that the market is going into a downward trend because all 3 moving averages are coming down. What you then do is you wait until you see it starting to come down further. And as you see it coming down, the moving averages have moved over. Get your Fibonacci. So at the moment, we're saying that the market's here. None of this has happened. So we put the Fibonacci on to where it is and drag it up to where the previous high is for there. Now, what we're looking to do is we're looking to see this market moving all the time. Now, the only bit of the market that you can see, if I take this across, is you can, in real terms, you'd be seeing the market here. Yeah, so as the market then progresses, all you're doing as it goes down, and I'll bring it back now to show you, all you're going to do is as the market goes down further, and these are hour bars, you don't need to check it very often if you're on the hour. You grab the Fibonacci and then keep taking it down and down and down and down. Now, when you set your Fibonacci, first of all, you're looking for a retracement up to 50% and then down, which means you want to put a pending limit order, a sell limit order at the 50% level. You want to put your stop loss just 5 pips above the 0, and your take profit is 161.8. So why don't we do that? Now, a very easy way, as well as doing as I've shown you before, you can go new order on the GBP. You put in the figure that you want whatever your money management is going to be, and we've taught you all about this. Say you want to put 0.1 lots on. What you can do is it's not market execution, it's a pending order. Yeah. And then it's going to be a sell limit. And then you'd put at a certain price and then place it. Let me show you a quicker way to do this. All you would do is you would go to the 50% line, right click, and say sell limit. So place on your one touch trading up here, one click trading, put whatever you want in, so it's 0.1. You right click and just go sell limit. It's that easy. And hey presto, a sell limit is on. Now you can grab it and adjust it actually to the 50% level. You can do it that way, but if you grab it, and you can just adjust it very, very slightly to where it needs to be. So we click it there and that's it. Now the 0, if you put your cursor on it and click the center wheel on the mouse, you put it on the 0 line and you go 5 pips above. So that's 1.36050. So 5 pips above would obviously be 1.36100. So let's now go double click it. And you want the stop loss to be 1.36100. And just click modify. And then that stop loss, look, goes 5 pips above the 0 line. Your take profit is the 161.8. So again, just bring the mouse on. Look, put it onto the 161 line. It's 1.33280. Again, just modify. Double click on the line and you put in the figure. 1.33260. And then you say modify. Now, you very quickly put your entry, your stop loss, and your take profit. But the market keeps moving down. It never returns to the 50% level. So you just keep moving it as the market moves down. And you keep doing it and doing it and doing it until you get to this point. There. So you've come to this point here. And what you have, the market now retraces and hits the 50% level. But as you're dragging this down, so say you dragged it down to this point here. So 4 hours later, it was this point. All you do is you just grab this, your sell limit, and you drag it down to the new 50% level. You drag your stop loss up to 5 pips past 0. And all you do now is you take this down further. So you just left click and take it down to 161.8. And you continue to keep doing this as you see the market going to further lows. You just drag these. So this now goes to the new 50% level. Take your stop loss back up to 5 pips above, which is there. And you take profit down to 161.8. But on this occasion, the market doesn't go any further. And look what happens. It comes up and hits. You're now in a trade. Market comes down, goes back up, down, back up to entry, down. It now hits the 100% level at this point. And what do we do at 100%? We drag our stop loss down to entry. And in fact, just a fraction past it. It won't do it at the moment because, of course, it's not a live trade. But all you do, you're in a live trade then. I can't take my stop loss past entry because it's not a live trade at the moment. It's a pending order. Basically, I'm just going to leave it there. It'll go there because it's just above. But you take your stop loss to 0 or a fraction past it and you leave. Now you don't move your 161.8 because it's gone to 100%. Take your stop loss to 0. It's safe. You think it's going to come back up and close at 0, but it doesn't. It goes down and back up and comes down and hits the 161.8. So that's the recent trend, and that would have been a lovely trade. So what we're going to do now, and if I show you the orders, you can see that your orders you're waiting to get actioned when it went up to 50%. If the market never goes to 50% and it changes direction, it goes into a buying mode, yeah? So an upward trend, just cancel it. So that's one example of a downward trend. So let's get rid of that now. And let's go to an upward trend. Let's have a look. Here's an upward trend. So what we're doing is we're looking for the first higher high. We get a higher high. And then it comes back. So once you see the market coming up, the two lines at this point in time here have all come through. They've come past the 200. You know that you're going into an upward trend. So the first thing you do is you grab your Fibonacci and you say, okay, let's bring it back to the previous low, which is here. And you then set here, you right click here. And this time you can't do it because the market's not in the right place because I've gone back in time. But what you would do here is you would right click here at 50% and there would be a buy limit this time on here. I can't put a buy limit because of where the market is at the moment. It won't allow me to. But there would be buy limit here and you do exactly the same. And you take your stop loss to 5 pips past 0 here and your take profit to 161.8. What happens is the market comes down again and it goes up. It never comes down to the 50%. So 12 hours later it's up here. So you can see you don't have to keep adjusting this all the time. All of a sudden it's up to here. Now what you do is you just drag your entry to the 50% level. So drag it up, put the stop loss back down to 5 pips below and drag your take profit up to 161.8 as I showed you in the sell. So you just do the reverse. And the market never comes down to 50%. A day later, 2 days later, it's up here. You've got another high. So you adjust again. So all you're doing is following the highs of the market till it comes down and hits the 50%. But of course it doesn't. You go up again. And the market never comes down to the 50% level to action your buy. And it goes up again. And the market never comes down to the 50% level. And you carry on up and up and up. And you keep chasing it all the time. Sometimes the market will not come down to 50%. It doesn't have that retracement of 50% because it's going up too quickly. Now you've got to the top. You don't know this is the top because this hasn't happened yet. The market comes down and starts coming through. And what happens here? It does come down to the 50%, but you would have cancelled that pending order because it's now at this point in time here, even though the market's coming down, when it gets to this point here, you have the lines telling you it's in a downward trend, isn't it? So if the market changes direction, there's no way you want to do a buy if the market is in a downward trend. So when you see it coming into a downward trend before it hits the 50%, you would just cancel that trade. So we saw a win on the last one, and we saw where you would not action and how, when you see the market change in direction, how you would close it before it got to 50%. Let's see if there's any others. Okay, so we've done the last three, actually, from current time that I'm recording this, we've done the last three trends. Now, what do you have here? The market has come through. You think it's making a lower low, which it does, and it makes a lower high, but you haven't got all your lines together. Now, all of a sudden, at this point in time here, all the lines are in the right direction. So you say at this point in time here, okay, I better get my Fibonacci on there. So you put your Fibonacci on there and go to the previous high. And you put, again now, this time we can do, it's a sell limit. You put your sell limit on. There it is. You click on it and make your stop loss 5 pips above the 0, and you make your take profit on the 161.8 line. And the market, I won't do that now. I've shown you how to put the order on. I want to show you how to keep dragging the Fibonacci. So 12 hours later, you look at it again and it's gone to another low. So you just adjust this to its new 50% level. So you grab a little delay here for some reason, right? So you grab your order and you take it to the new 50% level, and that's it. Just adjust the stop loss back to 5 pips above 0 and just drag down your take profit to 161.8. Market comes back up, never comes to the 50% level. Now you drag down further because 2 days later, because you're on an hour chart, remember, this is approximately 1.5 days later. It's down here. So you drag down your entry to here, down to the 50% level again. This time the market comes up and hits the 50%. So now you have a live sell. The market has retraced and hit your sell limit. And the market shoots down. You see it shooting down past your 100%. So at 100%, once it hits this 100% line, you grab your stop loss and take it to 0. Just a fraction, a couple of pips past 0. But this one carries on all the way down and wins again. So in the last three trends that have developed, and of course what happens then is that Once it's hit the 161, you can start another Fibonacci. This has closed at this point. So you say, okay, let's start another fib. So let's just delete this one for a second. So it's 1 down here. So you say, okay, I'll start another one. It's just 1 at this point. Let's put another fib to the previous high. And the market carries on down. So a couple of hours later, you can see it, or in the evening, you check it and it's come to here. So you put it to the previous low. You're going to have, at this point in time here, you're going to have your sell limit in place, the 50% level. There we go, at the 50%. Your stop loss 5 pips above, and you take profit at 181. And the market carries on down. A day later, you look at it in the evening, it's come down, so you drag it down again. And you drag your entry down. Make sure you take profits in the right place. Then you take profits at 161.8 and your stop loss is just above 0, 5 pips above. And the market over the next couple of days reverses and it hits 50% and you enter. Then it starts losing. Then it comes down again. It's to 100%. What you do at 100%? You take your stop loss to 0. You can't lose now. Market comes back up, doesn't hit the 50% level to stop at 0. And down it goes, and at this point in time here, hits take profit. Now what you've got to realize is your stop loss is just above 0. So therefore, if a trade ever loses, that's only going to lose 143 points. But you're going to win 309. So therefore, it's more than double. Now we've looked at the last 3 trades. It was a winner. Yeah, then it was a stop. But not a stop at stop loss, it's just a stop because the market changed direction. So a 0, and then you had another winner again afterwards. So 3 of the last trends, 2 big winners, 1 at 0. And that is the strategy. It is very good. It keeps working and working and working because actually we won 1 here and then we won a second one. So in this trend so far, we've won 2 and you could carry on again once it's 1 at 161.8. You could try it again, unless it changed direction, of course, which it would here. So you close it out at 0 again and wait for the next trend to develop. And that's the strategy. It's a very powerful strategy. It's got a very, very high win rate. But the great thing is about it is that your profits are more than double when you lose. I hope you enjoy using this strategy. It's made money for many, many years and it works very well. You have now completed bonus module 1, the Fibonacci Follower Strategy.